All right, we're going to go ahead and get started. I want to thank each one of you for coming out tonight. It's a little bit of a light crowd, being that we're right before Easter, but this is going to be a fantastic opportunity to dive deep. And I'm going to let everybody stay unmuted so we can do Q&A as we go along if you do have any questions to be able to pull this off. Tonight, we're going to be talking very specifically about construction and about construction loans. And, to set you up for success, we're going to be talking quite a bit about what the process looks like, what you have to do to get set up, and all sorts of things. But the real big question that I think most everybody is facing is when you're looking at construction is what are my options? And there's all sorts of options out there when it comes to construction, but there are really two main options that you're going to be looking at when you come in to building a home. There's are really just mainly two main options. The first one is the turnkey option. This is where you come into a neighborhood, kind of like a builder has a neighborhood, and they have pretty much contracted with all the lots. They own the lots, and they're selling those for you. And they're going to build on those lots, whether you buy the house or you don't buy the house. Typically, these work very well if you're looking for a neighborhood to live in. They are very nice little options because you can get a really nice neighborhood with really nice amenities. Typically, this type of purchase that you're going to be looking at is going to have 5 to 10% down. I know that when I was working for the builder, we had a 10% down requirement where you had to put 10% down on the property, and then they were going to use that as operating capital. That's a deposit. It goes towards the contract, but they're going to use that as operating capital in order to get things going. But then you really weren't required to have anything additional in order to be able to get it done at that point in time. You're responsible for the financing once the home has been completed and once the certificate of occupancy has been handed in. But other than that, you really don't have any other obligations other than to pick paint colors and maybe to pick what it is that you're going to be doing to the house, maybe the options and other factors that go along with it. So it's pretty seamless. You're going to pick from their repertoire of homes, maybe make some light customization when it comes to any of that stuff, but really you're going to be limited to their neighborhood and whatever they have available to you. What we're really going to be talking about tonight is something that's slightly different. We're going to spend a lot of time actually talking about, well, this option right here, which is how to build on your own land. This is a little bit more of the wild, wild west because there's less things. The builder controls a lot of aspects that you don't necessarily have to figure out on your own. For example, how to find the land. That's a really big one right there is you find the land, you just go to the builder, you go to the neighborhood, they present you with a lot, you either like it or you don't like it, you move to the next lot, move on. In this case, you're actually trying to find the land separately, and you're trying to go through different areas. You're driving around looking to see what you like. You have to walk lots and do all the other things like that. So the big step with this is that you're going to be building something that's truly custom, truly yours, truly on your land. Now, if you already own it, you can still use this type of construction. And there's a slight nuance to it, which we'll talk about a little bit more in detail. But in essence, if you find the land or if you already own it, the construction to perm is usually the most common way to be able to build on your own land. The nice thing is because you get to be a little bit more customized with these. In other words, you can pick a builder, you can work with them to build you a home, and they pretty much can make it as yours as you want to go. Now, the great part about this is it really does get to be yours along the way. And then once the home is 100% complete, you actually change the loan over into the construction loan. So what that's really saying right there is, in essence, you are actually, when you're doing the construction loan process, the construction to perm, is you're really dealing with two loans. You're going to be dealing with a construction style loan. And then when you're done and the home is 100% complete, you're either going to convert it to a permanent loan or you're going to refinance into a permanent loan. And the reason why I say it like that is there's two different loan types. There is a one-time close and then there is a two-time close. And both of them have their idiosyncrasies. Both of them have their benefits. Both of them have their drawbacks. But regardless of which way you end up deciding that you want to go, these are fantastic options to help you get into this. And that's what we're going to really be talking about tonight is the construction to perm option. And how does it work when you're dealing with a construction loan? Because when you're dealing with it in a neighborhood where the builder is building it, they actually have what's called a builder line of credit. And with this builder line of credit, what they're going to be doing is they're going to be financing the construction cost, rolling those construction costs into the house itself, and then you're going to be taking it over at closing, including the finance charges that they've accumulated. The difference is when you're dealing with a construction of perm, is in essence you're the one holding the interest payments on it. Now, with these construction to perm loans, there's a couple different ways that you can do it. There are some places that do require that you make payments as you're going through the process. And then there are those who do not require that you make payments throughout the process. I actually have the one where you don't require to be making payments throughout the process. And that's because what we're going to be doing is we're going to be escrowing the payments for whatever duration it is that construction process is going to be. We're going to be escrowing those to make that work. So we're going to talk a little bit more about that and kind of get you set up for success as you learn to understand what's going on with the construction process. So what's the real first step? The first step is actually to find the land. Well, I mean, the real first step is to identify how much you really want to spend. But after you've identified what you want to spend, identifying the land is really path critical, because you got to find out where it is that you want to live, and you got to really figure out what kind of land you're going to have and what kind of access you have. I've seen land, especially out in Powhatan and some areas of Goochland, that's completely landlocked, and there's really no way to get access to that land. And so that land, it really does take a study period for you to figure out what it is that you're getting into when you're buying this land. And that's extremely important for you, because you want to make sure that you're getting something that's going to suit your family, not only for access, but that you can use it exactly the way you want to do it. And going through the process of identifying that land is pretty important. You know, there's certain features that you would never know about. I mean, in the neighborhoods that you're driving through when the builder's building, you can kind of see what's already there, what's already established. But when you're buying the land, it's really hard. You can't just look at a plat. You can't just look at it with the pictures. You have to really, truly drive out and take a look at it. Now, once you've identified the land, you can, if you already own the land, that's different. But if you're just now getting ready to buy it, there are a variety of programs that you can use that can actually help you get into these homes. And we're going to talk about the loan options that are initially right here and how to get set up for success with each one of these loan options. You're going to notice that right here that there's actually 3-4 different types of loans right here. And I have all of these. We have the construction one-time close. We have an FHA one-time close. We have one for VA. That's not for Virginia. That's veterans. That's a one-time close as well. And then once you get into the jumbo program, once you start getting over a certain price point, you're starting to get more into that luxury price point. Now you're starting to get into the 2-time close. And there's benefits to both of those, and we'll talk a little bit more about that. But in essence, here's the kind of the terms behind it. Conventional, yeah, 660 credit score. That's a great way to get set up for buying a house and getting set up with a conventional loan. And look at that, you only have to put 5% down in order to make this work. And yes, they can even do second homes on some of these. Now, I also have fix and flip money so that you could do investment homes, you could do multi-units as well, but those are all going to be on the commercial side. They're not going to be in the residential. For tonight, we're really specifically just going to be talking about residential and single families. Okay. And so with the conventional side, you can go up to 95% loan to value, which is fantastic. The FHA, they go up to full standard FHA standard. So we can go down as far as a credit score of 600 and a loan to value of 96.5. That means they're only putting 3.5% down when it comes to the construction loan on building on this house. That's a fantastic benefit. Fantastic benefit. The same thing with the veterans or Veterans Administration. You can go down to 600, but in the case of a Veterans Administration, they can actually do up to 100% financing. This is fantastic. It really helps them get set apart and build a home, especially in certain areas that it's a little harder to find inventory. And so right now, this is a fantastic way to help some of if you're a realtor on this call, this is a great way to help them sometimes find the inventory that they're looking for. It does take a little bit longer. You have to work out with them I know you get paid on the land. I don't know how it works with the builder itself, but that's something that you'd have to work out if you're going to go into this process with them. But these are all fantastic ways of getting going. And the FHA and the VA loan are very flexible when it comes to building the home, as well as the conventional one right here. Now let's talk about the process here real quick and get into how this is going to work for the client as they're getting ready to get set up. Well, obviously we want to pre-approve them. And so we want to do that before they find the land, but we really want to go through the process of making sure that we get the pre-approval done. And then after we've done the pre-approval, they've already identified the land. Now we really want them to engage a builder. And the reason why we want them to engage a builder is because they really, 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 really need to set up a budget. They got to know what this thing is going to cost. I have one lady that I just spoke to earlier this evening. She said, we have a fixed budget. We have $100,000 for the land, and we have $500,000 that we're going to be using for construction. Absolutely no more. We're not going to do a penny more. Our budget is tight. That's where we're going. I'm glad she knows what her budget is. Now, this is where you can start getting into the downfalls of the budget, because sometimes what you experience when you're dealing with a budget, especially on a construction to perm, is sometimes you don't realize what you don't realize until you start getting into the process. For example, if you're buying a lot out in the middle of a really nice wooded property, how are you going to get the car in? You really need to put a driveway in. And there's no driveway currently. You don't run into that when you're dealing with a builder that's building on one of his own lots in one of his own areas of town. You just don't run into that. And so they're going to have to take some trees down. They're going to have to do some site work and get a driveway in, maybe put some stone down, maybe put some gravel down. They're also going to have to put a well in. They're also going to have to get a septic. They're also going to have to figure out how they're going to get utilities out to this. Understanding the budget and having a very clear perspective of what this is going to look like is extremely important. We don't obviously want to crush their dreams. We want to help them get across the finish line. But when you say you have a rigid budget of this and a rigid budget for that, maybe it's something that you have to look at instead of a $100,000 lot. Maybe it's going to take $25,000 or $30,000 to do the site work. Maybe you need to be looking at a $60,000 to $70,000 lot and use it if your budget is that tight. These are all places that you kind of want to look and you want to see what is happening with this. Now, once you've identified this, there's other places that you need to work with, because it's not just a lot where you're going to run into some of these situations. The finishes you can run into a lot of places too. For example, the most common one that I saw when I was working for the builder is I saw that they had overruns constantly in the kitchen, because the kitchen, they were going to give them, let's just say $20,000 that they were going to use. But that $20,000 was for the cabinets, for the countertops, for the appliances, you name it, everything in the kitchen. Well, that may or may not suit your needs. And so you have to really kind of think through the process of this budget to understand that maybe you need to go a little bit further than just understanding what those allowances are, and really go to town and start picking items out so that you're not caught having to write checks later, because many of these loans are what are called closed loop loans, which means that once you get started with a loan and you've closed on it, they're not adding any more money to the pot. So you need to make sure that your budget is actually pretty tight. Now, once you've identified where that budget is, now we can go to the next step, which is making sure that we get the application done like what you're seeing here. Now, this is not necessarily for the buyer, even though the buyer is going to have to do an application for a loan. We also have to go through the process of pre-approving the builder. And the reason why we have to pre-approve the builder is we want to make sure that they're going to be in the saddle longer than the warranty. And we don't want them to get halfway through construction on something like this and then all of a sudden disappear. And so it's extremely important for us to make sure that when we're doing this, that we're not only reviewing what is going on with the client, but we're reviewing what's happening with the builder. Because here's the really big thing that you need to know. Once we close on this property, once we've closed on the loan, the buyer's good, the bank's good. The weakest point now is the builder. And we need to make sure that that builder, that we remove all doubt when it comes to that. So we have to make sure that we're identifying what that means. And so we're going to get that application done. We're going to make sure we do the budget review as well. We're going to make sure that we understand what it is that is going into this house. And we really want to identify it from a very, very solid perspective. And the reason why I say that is because if the builder says install windows, but he doesn't define which windows they are, What does that mean? Is that a single pane? Is that a double pane? What are we exactly doing? So we're going to go through the process of reviewing the budget. We're not trying to infringe upon his profit margins. We're not trying to infringe upon anything like that. We're just trying to make sure that we know what it is that this person is going to deliver so that there's no finger pointing later as far as who's doing what. We do a final project review. We're going to be looking at the plans and specifications for what it is that we've got going on and making sure that it all works. Once that is done, we will go ahead and lock the loan. We're going to go ahead and start reviewing the work and then do the initial underwrite at the same point in time. This is a fantastic process because in this, if there's any hiccups at this point in time, it gives people a chance to kind of go through the mental process on their own of understanding what's happening with this house and making sure that they're setting themselves up for success when it comes to this. During the underwriting process, we actually have a separate person who is doing the final underwrite, not only on the project, but also on the builder. And we're setting the builder up to make sure that he has what we need. So we're going to be checking references on him. We're also going to be checking financials just to make sure that this doesn't cause any problems down the road. And that in essence, that we're going to have a really good closing right here. And then it's going to immediately turn into construction and be able to proceed without a hitch. Because just like it is that if you're in a transaction and you're trying to make sure that you're moving from one stage to the next without too much of a hitch, that's the same thing that we're trying to make sure happens when it comes to building a house. And it can be, building a house is not a sterile process. It certainly is not a science either. And so making sure that we remove as much risk as possible during the process, yeah, that's a big part of what we're trying to do. Now, once we get into, after we're done with that, the construction process starts beginning. So the builder has already identified the plans. Maybe you've gone to an online architect and you figured out that you want to use this online architect prints. You have to buy the prints at that point in time. You have all the budgets created from the plans and specs. In other words, the builder is now starting to get materials going, and and this is where you identify and sign the contract with your builder. And as you're signing the contract with your builder, you've already had a really, really, really clear budget because you've already, at this point, you've already identified the plans. You already know what your specs are, and everything is starting to move in the right direction for you. So now this whole signing of the contract is really an idiosyncrasy of the process because you've already, in essence, done all of the hard work up front, making sure that you've crossed that finish line. The next thing that you're going to do when you get into this piece is then now you're going to submit it for final approval and order the appraisal. And so this is where we get into making sure that everything's done. We've already done the initial underwrite. We've already done the income, assets, and occupancy. We've already done the liabilities. We've worked through the worksheets. I'm actually doing a worksheet right now for a customer that is considering. I'm going to bring that in so you can see kind of how that works, because this is a little bit different than what a lot of people do. And I'm just gonna, it's not allowing me to scroll right now, but I'm gonna go ahead and do this real quick. And let me see if it'll let me do it. Oh yeah, here we go. All right, so this is the construction worksheet that we have to work into. This is the estimated value of the home. She's going to have a loan amount of no more than 225. We have to do it at prime plus, which is what the interest rate is during the construction process. This is actually extremely important because as you're seeing this right here, this rolls into the final loan at the end. Her final loan is only going to be 225,000 when it's all said and done, which means that she'll have to bring 407,000 in order to be able to make something like this work. Now, there's the construction cost. Now, here's the interest reserves. Now, the reason why we're doing interest reserves right here is because, in essence, what we're going to be doing is we're going to be making sure that this, the interest reserve, as you can see right here, we're making sure that the payments for this home are completely embedded into the cost of this construction loan. That way, they don't have to fret about having to make double payments because they're going to be living in a rental. They're going to be living in a rental for the time being, and that's going to be very tough for them because they're going to have, in essence, double payments on things. And that really is going to be a worrisome piece for most people. So we do it very differently than most. Most places do require that you make a payment along the way. Instead, what we're doing is we're calculating what the interest is going to be on that loan during the process, and we're going to just add it to the loan so that, in essence, when that happens down the road, that you're not worried about that payment. The other thing that you can see here is that we have a reserve contingency of 5% of the purchase price of the construction costs. And the reason why we're doing that is because we want to make sure that if you run into an oops, I didn't foresee that, that you have an ability to be able to cover it without having to come out of pocket with some of these items. And this is a pretty big and easy way for you to get set up and to make sure that you have that. Now, the great thing is if you don't use that 25,000, then what we do is we end up taking it and applying it back to the principal of the home when it's all said and done, when you're finishing the process of the construction. So this is a pretty smooth process when it comes to this. Now, once project, this is a regurgitation of what we have. Now the construction process is beginning, and we have gotten the approval. Everything is moving right along. And then here's the construction process as they go. They're going to submit the work. They're going to start working on each phase of the construction. So the builder is not. Oh. Somebody have a question? No? Okay. So what we're going to see is that we're going to have a process in here where the builder does not get paid every single they do not get paid every single month as they're going along. Instead, what we're going to be doing is we're going to be issuing draws based off of milestones. And so what that means is this, is that, for example, in that one that I just showed you, the milestones are going to be based off of whatever the builder and also the homeowner decide when it comes to this process. And the reason why it's important is because they have to go through what is called a draw phase. And on each one of these phases that you're seeing right here, the construction project, they allocate the money based off of the project, based off of inspections, and they're based off of milestones. And so what that means is, let's say that they've already bought the land, and they're now starting the construction process, and they get the foundation in, and out of the $500,000 that's designed for construction, they're already $100,000 in. Well, that's where the builder has to come. They have to order an inspection, and then they come out and they send an inspector. On Monday they send out they submit for the draw. They look at and inspect it. Wednesday they look it all over. Thursday they take it for the borrower and get the signatures from the borrower, making sure that the borrower knows that the work has been completed and it's not a wink wink, we did the work. This is actually truly being done. And then within 1 week, they get their money. Now, they're only getting so many draws per construction. On a 9-month construction time frame, usually there is 6 draws and the final draw. And the reason why that is because we have to pay an inspector to go out. Every single time we pay an inspector to go out, it's $150. Every time we go down to the county courthouse, because as we draw the money out, we have to go down and re-record a new lien down there to prove that that money has come out. And then in essence, what we want to make sure is that all that stuff is legitimately done at the county courthouse. And there's nothing wrong with any of that stuff being done, but we just want to make sure that as it's being done like that, that they're releasing liens. And so here's what I mean is if you've already paid the mason, we want a lien release. We want to make sure that these liens are not piling up so that later we have to pay some material men or we have to pay some laborers that never got paid in the process. And so that's part of the inspection process and also the drawdown process is to make sure. Now, if you're buying and building in a neighborhood, the builder already does that for you. But in this process, if you're building on your own land, this is the way it ends up working, especially with this type of loan. Now, going into the actual construction process, once the construction process is beginning to be 100% complete and they're getting ready to wind down, we want to make sure that we start getting ready to convert this loan to the permanent mortgage, because we are in the construction loan, and the construction loan is really designed to be a short-term loan just for the construction phase. And like you saw in the sheet that I shared just a few minutes ago, it's truly just interest only. There's nothing really serious going on with that. They're just making interest only payments. We've escrowed all of them, so they're not going out of pocket for this. But now as they're completing the construction phase, we want to be able to set them up for what's called a mod, or the modification and the doc review. So what we're going to do is we're going to start refreshing their documents. We're going to recheck their payments, payment history, recheck other things like that. So here, if you have any clients that are thinking of doing this, your clients need to take a vow of poverty and isolation. No new cars, no new furniture, no credit events, no cruises, nothing fun, nothing on your credit until the house is completely built. Because if they don't do that, we do end up catching it in the long haul, and it affects their terms as it goes along. But having said that, if let's just say that everything goes perfectly, these people live and take the vow of poverty during this timeline and they're building the house, then what they're going to do is they're going to start doing the modification review. They're going to start looking at the items that we need to finish the review. They're going to go down to title and make sure that they can re-record and that all the liens have been satisfied by the builder. They're going to go ahead and schedule the signing for the modification at the title company. And then all of a sudden, we have wrapped up pretty much the entire construction process when it comes to the loan. And now the modification, they go down to the county courthouse and they start making this modification happen at the second closing. Because at the second closing, once they've finished up the closing and the construction commences, all of the stuff starts happening. This is the timeline that we just discussed earlier about the draw request, about the draw processing. This is the one we just talked about that. As we're going along with this. So these are the processes that they go through. And then once construction is complete, that's where that modification happens and people start going into that finalized statement as you're making this. Yeah, Jesus, yeah, we got to take the credit cards away. No doubt about that. You know how hard that is, even in the regular purchase process. But anyway, this is the construction process and the modification process, and this is actually extremely beneficial to the people because they can go in and they can build something very nice and very custom on their own home, on their own lot. And so if they're looking for that perfect place that they can go into for whether it's a retirement home or whether it's that perfect palace that they want to have for themselves, the process is not too terribly difficult, but it is something that does take some time in order to be able to get set up. And so we want to make sure that we address it soon in the process if they're looking to do this, because as you can see, there's a lot more pieces involved with this than if you were to go into a neighborhood and the builder was going to go ahead and just build for you in something like that. So as this is pretty much the process in general. I do want to let you know that I am constantly putting updates on my YouTube channel. I have several on there about new construction and things that we just got done talking about. And this is extremely important, especially if you have anybody going into this area. It's an extra way for you to at least line up and nail down what's happening in people's lives as they're looking to build. Because we do see a lot of people that try to go into this channel, but they really just don't have a clue on how to do this. And this is a fantastic resource to help you just get that one extra little movement going on in your business. Or if you're looking to build one of your own homes, this is a fantastic way for you to do it too. So if you want to see any of the stuff that I have, you're certainly welcome to join the channel. And as we wrap up tonight, are there any questions of anything that I may have missed? You guys can go ahead and unmute yourself if you got any questions.
Hey, Chris, I had a question.
Yeah, go ahead.
Hey, so you mentioned it needs to be a pre-approved builder.
Mm-hmm.
So how would it work if someone wanted to use like friends of theirs or contractors?
That's a great question. So we have to pre-approve the builder for two reasons. We have to pre-approve them because we have to make sure that they have enough experience to be able to handle what it is to build a house. Building a house can be quite a bit of work, and if you don't have the experience to do it, it's really not a good idea to go ahead and do that. And the bank is just not going to risk a lot of money if we can't prove the experience. Now, I have had contractors who didn't necessarily have a ton of experience in building homes. They built one or two homes, but they're really looking for some of that other stuff. It doesn't mean you can't use your friends. You can use your friends, but they are going to have to be licensed for the work in hand, and that they're going to have to prove that they have the financial capability to be able to manage this. Because like I said, there's only 6 draws in 9 months. So you're not getting paid every weekend or every 2 weeks. So if they can handle that kind of draw schedule and they can handle and they have the expertise to be able to pull it off, then it certainly is not a problem. I actually had one person who was did get qualified to build their own home. And I'm going to tell you that that's odd. It's not very common that that happens. This guy was a contractor though, and he was a builder. He had built multiple homes for sale. He would build like 10 to 15 homes a year, and he decided to build his own home as well. And they were able to prove him to do it. But I'm going to tell you, it's pretty uncommon to have something like that. When it comes to new construction, it can be done. It is a lengthy process, and they are if the experience is not there, they're probably not going to approve the loan. Does that help?
Okay. So does it, so they can approve contractors?
They can, yeah, as long as they're
Okay.
licensed for the work at hand. If they're
Okay.
a Class A contractor, they're capable, and we can show that they're capable, and they have the experience necessary to pull something like that off. Yeah, they'll approve them. Mhm.
Gotcha. And you mentioned the 9 month time frame. Does it always take that long to build a house?
No, it doesn't necessarily take 9 months. We have some builders that will build in much less than that. They'll build in 3 to 4 months,
Okay.
but it depends on the complexity of the home. So, for
Sure.
example, like the jumbo ones, those tend to take 12 to 16 to 18 months. And that's not a problem either. We do have that. But 9 months for, like, let's say a 2,500 square foot home is pretty common.
Okay.
Okay.
Thank
Now,
you.
there's a lot of people that can do it in less than that, but that is pretty common.
Sure.
Hey, Chris, quick question for you. If you already own the land, uh, do you guys have any stipulation about how much credit you give towards equity? In other words, you own the land free and clear, and then part two of that is if you did buy the land and you have the land free and clear, it's owned, but it's owned less than a year, does that have any concerns for you guys?
That's a great question. Some places do have a concern with it owned less than 12 months. We don't have that. We don't have a concern with that. The way that the land would end up working is that actually is used towards the down payment and the closing costs. And so let's say that the land when he bought it was worth, let's just use round number 100,000, but he's been sitting on it long enough and now the land is worth 200,000. When they do appraisal on the plans and specs for that home, they're going to count that as $200,000 in equity towards the down payment and closing costs.
Very nice. Thank you.
Okay. Any other thoughts or questions? Okay, fantastic. So I just want to thank everybody for coming out on this evening. And this is what I specialize in doing, is spending all my time making sure that I'm taking care of my clients, and I work 100% by referral. And so, there's a lot of great data about working by referral out there, but the main thing is that you really want to have the relationship, and you really want to take care of your people. You really want to make sure that people are set up for success, short term and long term. And referrals are the backbone of what I do. And so I'm thankful for the opportunity to serve you and serve those around you. And anything I can do to serve you, please don't hesitate to let me know on how to best set you up for success. All my contact information is right here, and I'm more than happy to serve. If you have any additional questions, I'll hang around for a little bit longer, but I'll let everybody get back to dinner and to their family. So thank you so much.
Thank you.
All right, thanks, Chris.
Thank you. Thanks for coming.
Thank you, Chris.
Yeah, thank you. Thanks, Jesus.